the line is that investing is the only business I know. Like, I've been doing this a long time. It's the only business I know where things go on sale, everyone runs out of the store. And the cheaper the price, the further they run. And to your point, in every other business, you put something on sale, people will run over each other to get it. But in investing, for whatever reason, when the prices start going down, people run away. And herein lies I think the biggest challenge of investing. Price is a liar. Price has nothing to do with value. The value of any asset is not its price.
Morgan Creek Capital founder, chief investment officer, and managing director Mark Yusko has attributed the recent price declines in the cryptocurrency industry to a slight crypto summer turbulence and not an indication of any serious problems. According to Yusko, crypto spring ended back in June, and we are now in the early stages of crypto summer, which he expects to last until after the halving event in 2024. Just like in previous summers, Yusko explains that we are bound to get these brief periods of price declines, but things will pick up gradually until we begin to get more and more higher highs and higher lows. Bitcoin prices slumped on Friday following reports that Elon Musk's spacecraft engineering company SpaceX had sold all of its Bitcoin holdings. On Thursday, the Wall Street Journal reported that SpaceX had about $373 million worth of Bitcoin on its balance sheet in 2021 and 2022. The report further states that the WSJ has obtained documents related to SpaceX financials, which reveal that the company has now decided to write down the value of its crypto holdings and sell them. Bitcoin bears pushed the leading crypto asset to a 2-month low following the news, dropping it to an intraday low of $25,409. As of press time, prices have recovered slightly, and the leading cryptocurrency is trading at just above $26,000, a 10.72% decline over the past week. Friday's sell-off also impacted Ether, which dropped to an intraday low of $1,551, its lowest price since March 12. According to Yusko, price declines like this should be viewed as the assets being on sale and offering juicy discounts for savvy investors. The renowned hedge fund manager gives his thoughts on the Bitcoin crash, Bitcoin spot ETF, and the coming halving event during a recent discussion with BitLab Academy. During the interview, Yusko explains that different kinds of market participants are attracted to different periods in the 4-year crypto cycles. First comes the investors, then the traders, then the speculators, and each has distinct participation patterns and unique contributions to prices. But the most important thing for investors to bear in mind, Yusko adds, is that the current Bitcoin price is way below its fair value. When the traders and speculations start moving in, Yusko is certain we will see massive price increases just before and after the April Bitcoin halving event. We will now bring you clips from Mark Yusko's interview. Please like and share this video, subscribe to the channel, and turn on post notifications for more videos. Also, be sure you drop your comments and observations in the comments section below. Everything you do helps with the YouTube channel and greatly contributes to the channel's growth. Thanks and enjoy the video.
If you're excited about investing, you're doing it wrong. Right? No, you are. I mean, if you feel really good about things, you're doing it wrong. In fact, it's worse than that. If you make an investment and you feel good about it, you'll probably lose money. If you feel really good about it, you're going to lose a lot of money. If you make an investment and you feel a little sick to your stomach, a little apprehensive, you're probably going to make money. If you feel really sick to your stomach, you make a lot of money. And it's because by the time you and I feel good about it, it's already in the price, right? All the information is in the price. The market has already. And if you feel really good, you're buying something that everybody loves, then you've missed it. And that's why the average individual then rides it over the cliff. It's an interesting dynamic when you think about crypto and why we have this 4-year cycle. And we're in what I refer to as crypto summer right now. Well, what is crypto summer? Crypto summer is that time where the market has a generally upward drift. It's not dramatic, but slowly upward, higher highs, higher lows, just kind of, like a roller coaster, kind of moving its way up the track. And what causes that? Well, what causes that is investors like myself, I consider myself an investor, have done the work, right? We spend hours and hours and hours looking at the value models and said, okay, the Metcalfe's Law model of Bitcoin, which use Bitcoin as an example, is 55K. Now you can say, well, that number's silly. No, Tim Peterson, my buddy, has this great model. You should have him on the show sometime. He's amazing. And that model's been deadly accurate on the value of the model, because any network can be determined, the value of it, based on this Metcalfe's law and the number of participants in the network. Make a long story short, if the price at 29 is lower than 55, then as an investor, I should want to accumulate. I should want to buy, right? Well, then what happens is, as we get toward the halving, that'll happen next, April, and next June we'll shift into crypto fall. In that transition post-halving, crypto fall is where the traders start to come in, because we'll start to approach that fair value, and the traders just see movement. Trading is fine. And the good traders come in and they'll actually push the price a little bit, but then you get above fair value. Well, now the speculators come in. And in general, speculators are not even evil, right? What is a speculator? A speculator is just someone who takes the opposite side of a hedger. A hedger is like a producer. An oil producer sells using the futures market. Speculators take the buy, because for every sell, there's a buy. Every buy, there's a sell. That's my favorite thing, when people say, "Oh, there's excess buyers in the market." No, there's not. There's
it's exactly equal.
Yeah. Precisely equal.
Yeah.
And there could be, on the margin, the next incremental trader could be one or the other, but there will always be an equal number, or the market doesn't work. So then the speculators are there, and they're fine. The miners are selling their coins, and they need to sell more because the block rewards just went down. So the price needs to rise. Well, then the leverage comes in. And when the leverage comes in, speculators turn into gamblers. And the difference between a gambler and an investor is not just where in price relative to value, but also has to do with amount of work. Gamblers don't do any work. I heard that coin's good. I'm in. I find this cycle will get exacerbated and get exaggerated. And then when price exceeds fair value by so much, investors turn around and say, "I'm out. I'm going to rebalance, because if I bought it early, now my weighting is really high relative to my anticipated desired weighting. And so I'm going to sell." Well, that triggers the downward momentum. Then the short sellers come in and they push it back down, and then people get margin called, and we get the collapse. But that's when the cycle starts all over.
During the interview, Yusko discusses his thoughts on the approval of a spot Bitcoin exchange-traded fund and how it will impact prices as the industry draws closer to the 2024 halving. He explains that the approval of one or more spot Bitcoin ETF will positively impact Bitcoin prices, but not necessarily live up to all the hype that has been building up about it. On Sunday, Forbes optimistically reported that the cryptocurrency market is now braced for a $15.5 trillion Wall Street earthquake. The article notes that a flurry of SEC spot Bitcoin ETF decisions will become due in September. It further states that the regulator will have to approve, deny, or delay its decision on at least 5 Bitcoin ETF bids from asset managers that look after a combined $15.5 trillion. While Yusko does not dispute that a spot Bitcoin ETF will encourage more institutional investors like himself to invest in Bitcoin, he cautions that the reality might not be as rosy as the fantasy and hype. Here are more clips from the interview.
Institutions, theoretically, are better decision makers than retail individuals. The problem is, a lot of institutions suffer the same problem because they're run by small groups of humans. And those groups tend to make equally bad decisions. The pension funds in particular have a long history of being just as bad as individual investors. So I don't know that the institutional money coming in is going to be quite the panacea that everybody thinks. Not all institutions are the same, right? There are long duration investors like endowments, foundations, some pension plans. There are shorter duration institutions. I mean, BlackRock would be that, right? An ETF is not a long-term investor, right? It's a daily liquid, tick by tick liquid asset that the institution BlackRock doesn't make the decision. It's the masses come in, the masses go out, assets go in. Look at ARK, right? It can go, lots of money can go in, lots of money can come out. Now, the scary thing to me is, despite flushing, losing more money than she made, more money still going in to that ETF. So I don't really understand that. But the institutions are very varied. And if institutions like Citadel, right, which are the ultimate high frequency traders and day traders, come in, they have a very, they have a fractional of a second hold period versus, Yale might say, I want to hold this for 10 years, or I might say I want to hold this for a decade in my venture capital fund, which we do. So very different. And the other thing that I think is interesting is this is not new. We've seen this before. GBTC was the perfect analogy. We know what happens when a institution, right? GBTC was a Cayman trust. That is a institutional pool funded with all of this other individual retail money. Now, it couldn't be retail at first because you had to be a qualified purchaser, and then qualified investor, and then you had to buy it in the private markets. But then a year later, you could sell. So then people could trade it in their PA. Well, what happened? We hit the $10,000 fair value, and then we went ballistic. I mean, we went straight up. Yeah. And everybody's like, oh, that was Michael Saylor and this. No, that was GBTC getting bought every day. Their asset base went from nothing, literally nothing, to I think 20 plus billion at the peak. And the thing about people forget is when the asset was 200 billion, and 20 billion comes in, you're like, oh, that's not that much. No, it wasn't 200 billion. At least 150 billion of that 200 billion was never going to move. It was the lost or stolen and the stranded and the hodlers and the people who are still accumulating. It was maybe 50 billion of free float, 20 billion on 50. That's going to put some serious pressure. Now we got this again. We got a $500 billion asset, and 100 billion of it is probably the free float. We're talking about 30 billion. If 0.1% of the 30 trillion of assets that are engaged in ETFs, is according to Eric Balkunis, who's an interesting analyst, 30 billion on 100, that'll move the price. But what if he's wrong? What if it's 1%? What if advisors like, I have an advisor and I haven't been allowed because, UBS doesn't allow you to own anything crypto related. When this thing gets approved and it's a BlackRock fund, they're going to have to let it be approved. They're not going to be able to say no longer. And then I'm going to put at least 1%. And if everybody puts 1%, now you're talking 300 billion on 100 billion of free float. That'll move price a lot.
During the interview, the Morgan Creek Capital Managing Director also gives his thoughts on possible price manipulations by Wall Street giants like BlackRock. According to Yusko, the big banks have been heavily shorting Bitcoin for about 2 years now, since the first Bitcoin futures ETF was approved in 2021. He adds that manipulation becomes very easy when people are buying paper contracts, mere representations of the real thing that often have no positive impact on prices. Compared to the manipulations with the futures ETF, Yusko adds that a spot ETF will be more beneficial and less easily manipulated. What are your thoughts on Mark Yusko's interview? Do you agree that we are already in crypto summer and prices are going to really improve upon the news of a spot Bitcoin ETF approval? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.